Okay, so welcome to the annual general meeting of Airasia.
Okay, good afternoon.
Yes.
Okay, I'm your chairman today, and I'm Rajesh Khanna. Together with me is my co-pilot, Paul Andrew. Okay, so we will kick off with our AGM for 2011. So as you can see, we have breakdown few of our outline for our AGM today, and it will start from our company history and business. Of course, our vision and awards and achievements, our products, range of products that we provide, especially our service, notice of annual our AGM, our corporate information, profiles of our board of directors, statement of corporate governance, chairman statement, as well as the one you are waiting for, our income statement. Okay, just Airasia in a glance, how we survived throughout these 4 years. As you know, it was founded by Tan Sri Anthony Fernandez, and yeah, he's a chartered certified accountant. It's crucial information for us because we are doing accounts today, so we have stand a chance to open up at airlines. So history, it was not founded, I mean the Airasia is already there. It was established by Malaysian conglomerate KRB Highcom in 1993 itself. And the glaring facts here is that Tony Fernandez bought over the company for the worth of RM1 ringgit, and also comes with 40 million of debt. So we survived with all this, and now Airasia flies over 400 destinations spanning over 20 countries. Okay, so our vision, as you know, and we have to hammer that again, to be the largest low-cost airline in Asia and serving the 3 billion people who are currently underserved with poor connectivity and high fares. And our mission, why we are in our business, is to be the best company to work for, whereby employees are treated as part of our big family, and create globally recognized ASEAN brand. And the third will be to obtain the lowest cost so that everyone can fly with our Airasia. Last but not least, maintain the highest quality product, embracing technology to reduce cost and enhance service level. So there's no doubt why we are here with our vision and mission. Okay, we have achieved quite numerous of awards and achievement, but we're going to cover the 2010 and 2011's achievement. As you can see, 2010 Masterclass Global CEO by Tony Fernandez, the portrait of good leadership of the brand itself, and World Best Low-Cost Airline by Skytrax. Skytrax and prominence awards for us is because Best Air Award won that award, and few other low-cost airlines, world low-cost airlines. And on 2011, again, Best Low-Cost Airline by Skytrax, and Best Asian Low-Cost Carrier by TTG Travel Awards. And the awards, we are still counting. It's coming in. Our product, that's confident. Our product, it's not on, we have Airasia Cargo, Courier, Airasia Go, Megastore, Ratings, and Insure. Okay, a bit of our operation highlights. So, especially at the passengers carry, we are in this business. So it's very important for us to know. It's really tie into our mission actually, how much of passengers we carry. So throughout the years 2008, 2009, 2010, and last but not least 2011, we have an increasing trend, and we have highlighted our achievement. It's keep on going up. There is no such thing as we are coming down. And revenue per ASK is available seat kilometer, and there is a decrease between 2008 2009, but we buckle up. 2010 2011 we are seeing the trend is increasing. Cost per available seat kilometer, and from 2009 to 2011 there's an increasing trend, and we are stopping at 12.8 cents.
That's negative.
No, it's a positive. Right?
Yeah, but
in
increasing
terms of
costs.
Yeah, increasing costs. Yes, of course. It's, but okay. Next is the size of the fleet. This we have to serve more passengers, and the fleet have to be expand as well. So there is a trend of increasing. So, financial highlight: revenue is climbing up. So now we are stopping at 4 billion. Profit before taxation, now we stop at 777 million. There's a decrease. And total assets, we are getting fat, 13.906 million. And shareholder equity is in a increasing trend. Now we have almost like 4,006 million.
4 billion.
4 billion, yeah. So that's our significant achievement. So
Can we go back just now to cost tadi, comparison between
ASK.
the revenue per kilometer seat and the cost per kilometer seat?
okay.
Is it the trend, the margin, the margin, is the gap increasing or decreasing
You mean the revenue?
between revenue and cost?
Revenue and cost.
Cost is
You mean
increasing.
the rich?
The gap, the difference.
Oh, between years is it? 2010 and
Yeah.
So if you can see 2010, we have like 0.4, 11.8 to 0.4. Here is like almost like 1, the increase. So
The revenue is 1.
the revenue is 1. Because 16.2 to
The cost is 0.4.
0.4.
So 0.6. The difference lah, the gap.
No, you see, cost per SK from 2010 is 11.8 to 12.8, so it's 0.4.
Okay.
So the gap is 0.4.
In 2010,
2010 is
0.4 is 1.
No, it's 1 cent. It's 1 cent.
1 cent.
Yeah.
The difference is 1 cent.
It's sorry, 1 cent.
Yeah,
Yeah.
1 cent per kilometer seat.
Yeah.
One
Per
cent
seat kilometer.
Yes.
Yeah, 6
Yes.
kilometers.
Seat.
ASK
Available
is
seats
1 cent.
Ah,
Yes.
1 cent.
1 cent.
The cost.
The cost.
The
The revenue also 1 cent.
1 cent.
Yeah. So it's directly related to cost.
Related lah.
Directly proportional. Yes.
no. We want to know the gap
The gap.
between the available the cost per available kilometer seat and the revenue per available kilometer seat.
Okay.
The difference.
The difference.
So you take the cost per
Cost per SK. This is the cost per SK. That's the.
so just add 1 minus that.
Oh.
Oh,
This one minus
okay.
that.
4.4 cent.
4.4.
Okay, into 2011, 2010.
Same. 4.4.
Okay.
So it's directly
So what
proportional.
does that mean?
That means they consistent lah. Mana they are able to control costs and match the revenue lah. Mana they maintain the gap. The gap is actually the profit margin.
Okay. Yeah, true. Yeah.
So we are doing good.
Yeah, true.
Good, we maintain.
Thanks, Prof. Okay, this is the notice on the AGM. We got it directly from previous one. So I'm not going to touch on this. Thing. Just skip. So a brief on the corporate information. Some of the phrase that you have seen before, and it's not clear though. So as well, the group CEO is Tan Sri Dr. Tony Fernandez, Paul's uncle. Dato Muhammad Kada bin Merican is the independent non-executive director. Name that we Dato Pham Lee Yi independent non-executive director as well, Datuk Kamarudin Meranu, Deputy Group CEO and President of Group Finance, Treasury and Corporate Finance and Legal, Datuk Leong Sani and Leong Kisiong, you can call him Leong, independent non-executive director, Conor McCarthy, non-independent non-executive director, second from the left, Datuk Abdul Aziz, non-independent non-executive chairman. Last but not least, Datuk Muhammad Omar bin Mustafa, independent non-executive director. So this is the group that running the company. Profile of board of directors. Okay, this is the profile. Okay, I'm just gonna skip this. Okay, see where they graduate from. None from India.
Soon to be.
It's too soon to be. Accountability statement of corporate governance, so we just put it there. It's the part of the requirement. Chairman statement. Okay, what Tony has said on business. And this will be the 5 years group financial highlight from 2007 up to 2011. We will compare the 2000 as part of 2010 to 2011. So there's an increase in the revenue, and net total expenses increase as well. Our EBIT, earning before income tax, increase as well, and the total profit, the net profit decrease, dropped to 555.
Why?
Why? Why? I think there's an increase because in the expenses,
Taxation
increase,
tax.
and share of result of associates. There's an increase there.
Increase or decrease?
The taxation increase, right?
Tax increase.
Tax increase,
yeah,
okay.
tax increase.
There's now the
The EB decrease.
share in the subsidiary.
Share of result of associates. Associates. Earlier we don't have. Then after that we have around 6.
Increase or decrease?
This increase.
Increase, then the profit should increase.
Yeah, your profit
Oh,
right now
actually it
is
should be minus. It should be decreased.
Decrease.
It's a minus. Yes.
Yeah.
So I think that contributes some of the decline. So balance.
But there's actually nearly half a billion, isn't it?
Yeah, what's the reason?
Yeah, just discuss the taxation around that.
What was the taxation?
Taxation, half a million.
Taxation, yes. You see, it's from 38 going to 222. Who wants that? That's what we fight for. We want to reduce the tax to the government.
But that only explains half of it. Where is the other half?
That's contributed quite a high.
Because profit before taxation decreased in the year 2011.
Yeah.
And then the net total expenses.
So what's the reason?
2 plus
You decrease in profit?
you mean the profit, right?
Yeah, profit before taxation.
Revenue also there's a decrease.
Yeah, so what's the reason?
That's why I need to wait my time. So the revenue decrease.
Oh, revenue
The
decrease.
revenue decrease as well. There's a significant drastic change there.
Okay.
Revenue.
So it's because of the revenue decline, lah.
Yes, the heart of it is the revenue, and the
2010 is what? 5,000.
is 3. 948,095.
Then revenue increased.
Yeah. Compared to 2011, it increased.
So
But
it
the
decreased.
profit decreased.
Sorry, I'm looking at the wrong figure.
Yes.
Okay, the revenue increased, but there is a.
No.
Hey,
Okay.
one say yes, one say no.
Okay, actually.
This is low.
Direct training.
Don't worry, we are better than PM. We are better than PM.
So what?
You can see the share. There's a share on 2011, right?
Okay.
Okay, that's about 5,000 million.
Share.
565, yeah.
Share does not affect
That's deductible.
He's talking about the
We want to
The
know,
operating profit is still profit. It's more than 2010. Okay.
has the profit increased or decreased?
Total profit
Or decreased?
Decrease.
Okay, so we want to know the reason why.
Yes.
Okay. That's because there's a deferred taxation of in 2010 that's 32 million, while in 2011 that's 203 million. The deferred taxation.
True, but if we go back to the revenue, it's already decreasing. That's the reason. We
Why,
want to
No,
why,
know.
why don't you
revenue
go to income statement?
Take your time.
It's increased in
I have another
In
question.
revenue is increased.
I have another one. Have another AGM.
Right.
okay.
Yeah. From here we can see why.
Increase in expenses. Say profit before taxation.
No, you see the revenue.
Yeah, 300 million different because
Depreciation.
But revenue increased from 3.9 to 4.5
okay.
revenue, but profit has been
The overhead increase.
profit before tax.
That
decreased.
and the foreign exchange loss and gain.
Less expense 1.2 to 1.7 billion dollars. Management,
Where? 1.2. This one.
yeah,
Aircraft fuel expense.
yeah, that's the one. That's the thing.
That's an increase here because we are increasing the fleet.
Yes.
Yes.
Thank you, sir.
So the fuel cost increase is the main reason.
That's why your profit went down.
Yes.
Okay.
And the depreciation?
Depreciation of your
Yeah,
like
I see from the. I think
It's about 50 million.
I think the tax
500.
also played a big role, right? The taxation.
Yes, also, but just now actually the fuel cost is the main reason.
Almost like 500.
Yeah.
That's 500 million.
550 million.
500 million, yeah. Oh,
So it's not our fault.
Yeah.
Live on the field.
Aluminnya dah naik.
Nanti saya kisah.
Oh.
Right.
Okay.
Okay, it's not really about petrol lah.
Can do that.
Okay, what are the glaring effect here is that total asset, you can see there's an increase in our total asset, and the shareholder equity 3641 to 4036 increase.
What's the reason of your increase in total asset?
Let me finish first, and then I'll come to that.
Come on lah.
I'm getting the flow actually. Everybody
You only had one share, I had two.
Cash flow statement. Cash flow from operating activities 1594 to 1404. Cash flow reduced. Cash flow from investing activities 1868487. And the net cash flow 757 to 617 drop.
Why is the cash flow from operation higher than profit?
Cash flow higher than profit. Which one? Year 2011.
11. Okay, your cash flow from operation is 1.4.
From operating activities is
1.4 billion. Bawah sedikit.
yeah.
Okay.
Okay. And your profit after tax?
Profit after tax.
Income statement is 777.
Before the after tax is 5553.
555, yeah, okay.
555.
So why is our cash flow from operation higher than profit after tax?
Increase of fleet,
Pardon?
like your increase of fleet, more activities, then what? to be?
Actually kita kata dulu that cash flow from operation is cash flow profit.
Profit. Okay.
Yeah. So our cash flow profit is 1.4 billion.
Okay.
But our profit after tax is only 555 million.
Oh, okay.
So where is the difference?
Gain on disposal.
Gain on disposal. Cash flow for operating activities. You can see a significant amount here. Gain on disposal. Writing off. It could be continuing from
They
here.
got about different about 200 million.
Only here. More? From 555 million to 1.4 billion. 900 million different.
Unrealized foreign exchange. And also key.
Interest income is very much.
And then fair value gains and losses from derivative financial instruments.
How much is that?
Compare with 2010, we got difference about 250 million.
I don't know. We still need to find out 200 plus.
That's
What's
This
that?
and this.
fair value. Fair value gains and losses on derivative financial instruments.
That's yeah, it's 40
If you compare with 2010, it's about 250 KK.
2010. Is that one of the
Still the main reason is your depreciation.
depreciation?
570 million there.
Okay. Yeah.
Mr. CFO.
From what? From 5119?
No. It's from the net cash to the profit. That's
If you on top there is profit after tax. Before tax, before tax.
And
Then
we have
but
depreciation.
depreciation is 570 million there. So you add back.
So how can depreciation become positive? It should depreciate,
Not the value, right?
No.
the value.
It's from just now you didn't add is zero, and then your asset, even though you depreciate, you get something from that, right?
The value.
Or maybe
the outstanding
the
value.
asset appreciate, not depreciate.
No, the asset depreciates. Just say you didn't add your laptop,
Okay.
and then after you get the profit before taxation, and then you add your laptop amounts,
Oh,
and then you get that.
To the current market value. Really.
We discussed this earlier. Basically, we said that depreciation is not a cash flow, not a cash outflow. It is just an allocation of expense. So that is why we add back. So it does not involve payment, because the payment is when we buy the asset originally. So the 570 million does not involve cash outflow. So it is added back. But it has been deducted for purposes of determining your profit before tax. That's what is the rest? The rest is
Next again.
what's that? That's a negative good that you have to deduct.
Yeah.
But now you need to look at what you added.
Interest expenses.
Okay, interest expense you deduct there, but at the bottom there you add back.
Yeah.
Yes.
Bawah lagi. Then you add back interest expense. I mean you add kat sana, kat bawah you deduct. So it tallies up. More or less.
Oh, interest paid.
Foreign exchange loss and gain.
But this is 272 million dollars.
Trade and other payable.
Yes, that's the one. That's another one.
Oh.
What does that mean? What is that?
Trade and other payable.
Because from the subsidiaries, from the subsidiaries that they have, they are doing trading and other sort of businesses.
This is actually collection in advance from customer.
Oh, okay.
Payable is collection.
Yeah.
Only for Asia.
Only for Asia.
And other LCCs.
Okay, sorry, go ahead.
Now,
Thank you.
Right, thank you, Doc.
No, but we still have 2 more to go.
coming.
Yeah, stop.
There.
Okay. Here and then here more on the consolidated operating statistics. So passengers carried, there's an increase. Capacity increased. Okay, load factor from 28 increased to 80%.
So 80%, you tengok the difference tadi Malaysia Airlines was 70 74% dia bilang, this is 80%. So 1% increase mean a lot, mean the world actually.
Aircraft utilization hours per day, I mean still a significant figure, 12.2 up to 12.3.
Okay.
Average fare 177 dropped to 176, and the yield revenue per available seat kilometer 17.2 increased to 16.2 increased to 17.2.
That's very great, good, very great.
The revenue for the yield revenue. Cost per SK we have discussed earlier, 12.8. And okay. Other than that, you can see size of fleet at the year end, Malaysia increased 53 to 57. We have yet done the comparison to mass, but we are in different category.
Size of fleet is the aircraft itself?
The aircraft, the fleet.
The numbers of
Number of
Number of passengers.
You have to venture into ships. So far we are doing the fleet. Number of employees, things increase, and we increase our staff 4702 to almost like 5137. Okay. Percentage revenue via internet, on those exchanges via internet, 77 to 78%.
percent, Okay.
Percentage, yeah, percentage. And RM to USD average exchange rate 3.22 to 3.06. It's just for 24.
Decline.
Decline.
What does that mean?
That is the exchange rate.
Exchange
RM,
Ah.
Ringgit Malaysia to USD now it's 3.06. Earlier we got a higher decline, 3.32.
So your borrowing become lesser or?
No, the exchange rate actually.
This is exchange rate. We don't borrow from
Before for-
Malaysia.
For 1 USD, you need to pay 3.22, right? But now you pay only 3.06.
I think this will be more on the international flights.
Yeah.
The USD.
And instead of buying fuel also, we're buying fuel in US.
Buy for petrol now.
Cheaper.
So next I will. Okay.
Huh?
I haven't.
Good
This is
good
just for the first slide.
good.
Thanks for being not generous. Okay, this will be the financial statement analysis by Asia chart.
Okay, as you can see, this is the 5-year chart. So at the beginning it was low and then it increased. Okay. Next.
So what do you see the trend?
Oh yeah, you just
trend
Going
was-
down.
going down
Down.
because of Halindo.
There's a trend that going up, but there's a trend that we will buckle up as well here. So I think we can.
Now due to economic crisis.
Gee.
I think one of the other factor will be because
Tony
Mr. Tony Fernandez is no more.
Yeah. You want to go and fix in Thailand and
There are
Indonesia.
one thing, the few routes being cancelled, they are consolidating, and they are focused not really on Malaysia now. They are focusing more on the ASEAN or Indonesia as well. The population is high, so we're going to benefit from there.
So you are also seeing the trend going down.
We foresee the trend might go down.
A little, but it will boom up.
Okay.
But now they already advertised that they want to send flights to Middle East, to Mecca.
Long haul.
Yeah.
Okay, so you can expect somewhere here lah. It's like
Mark my words.
Yes,
okay, so this is the point trend.
Okay. So this is the revenue. You compare from 2011 and 2010, it increase. Cost of sales increase. Gross profit decrease. Other income increase. Operating expenses increase. Selling general and admin expenses on a total decreases. Okay. Depreciation increase.
Share of result associates.
No, depreciation. Okay, share of results of associate company increase from nothing. Okay. Finance cost decrease. Profit before taxation decrease. Tax itself increase. And then there you can see the tax, the difference.
there's a
500.
lot of increase.
Yeah, 520 million. And then the profit for the financial year decrease because of the. Okay, and then total comprehensive income decrease, earning per share decrease from 38.4 to 20.
Oh, that's drastic, eh?
Yeah.
Yeah.
Well, everything looks like declining except revenue.
One question.
Yes.
Okay, I want just for the sake of asking. In 2009, the taxation is it nearly the value of 2010 or is it the value of 2011?
2009.
Why? Because maybe they have been given tax exemption for perhaps 5 years or
2009.
Tadi ada the 5 years.
2005.
Drastic increase kan?
Are they been given any tax exemption?
They have, yeah.
First year kot.
They do.
First 10 years kot.
Maybe first 10, this is the 11th year.
Oh,
Maybe
yeah.
after this, the 10 is not going to go up. Sorry.
It's okay. Please ask questions, please.
But if we can't, we will ask the Prof.
Yes.
Okay, it's not
Okay,
much
okay, let me zoom up.
Zoom please.
Just
Okay, thank you. Okay, where's the tax?
taxation.
Tengok the difference between profit before tax and profit after tax.
Taxation, okay, taxation. Yeah.
Still low.
It's,
2007 is 149.
Taxation.
but you can see drastic change from 2010 to 2011.
Yeah, bro.
They are getting, they have gotten tax credit 2007, 2008. Is it so?
Go positive.
2007. And then they have to pay tax 2009. Then 2010.
Because of the carry forward, like you said previously.
No, they've been given investment incentive.
Investment.
Oh, okay.
So how So that means lesser tax or what?
Lesser tax lah.
Lesser tax.
But that's
Meaning to say, doctor, starting from 2011 onward, there's no more incentive.
No more incentive.
So you are fully independent.
yeah. Because when he bought, it was in 40 million in debt.
Oh.
So for him to cover his debt, of course they can't
Yes.
charge for tax.
So process take long time.
But that one is in 2001. When you bought it?
Just now 1999.
2001.
2001.
2001.
And they carry forward.
So it's a 10-year.
For 10 years tax exemption.
I don't know.
Tax exemption.
No, it's not 10 years because in 2009 they already
Minus.
start to charge. Okay. The 2011 you have to pay more because the 2010 they brought forward the amount.
Oh.
So you have to deduct the tax based on that credit. Okay. Okay.
But don't worry, we are increasing.
Right. Yeah. Next. Next.
DPS is ratio and LC.
So now current ratio. Current ratio is current asset divided by current liability. So you can see in 2011 compared to 2010, you can see that AirAsia still have greater assurance that their liabilities will be paid. Okay? Because it increased from 1.56 to 1.72. Okay? And then about quick, or you can call asset ratio. That's current assets minus the inventory divided by current liability. So you can see 2010 and 2011 there's an increase. So assets still fast in converting to cash with increase in the ratio. Okay. And in debt ratio, that's total liability divided by total asset. So you can compare with 2010 and 11. There's slight decrease. So it indicates there's a decrease in percentage of its asset financed by their creditors. In earning per share, that's a decrease about 18.4.
So, is the price earning ratio also decreasing or increasing?
Which one, sir?
Price earning ratio.
In relation to EPS.
You need to take share price divided by earning per share.
What share price are we taking? The average for that year?
The end of the year lah.
End of the year.
I think that's in Cisco.
I think Cisco. What's the issue?
Cisco.
Tak ada.
Yeah, I think I missed that.
Okay. That's an important thing to know the market sentiment, because if the price earning ratio is increasing, that means the market is bullish towards the company. Yeah, but if the trend is declining, then the market is bearish against the company. And that is an important trend for us as shareholders, because if the market sentiment is bearish, then we have to sell, because otherwise we will suffer now. If it is bullish, then we ride along.
Although the EPS is giving us a low.
Yeah,
dividend.
just like TM tadi kan,
Yeah.
the EPS is going low, but the market support is bullish, so they maintain the price. The price actually went up.
Okay.
Kan? So
That means it's not in relate, sir.
EPS and
it depends. It depends on the market. I mean, the market sentiment. This is a emotional thing. I mean, this is not based on fact. So investor can be emotional.
Rule of thumb. Okay.
But again, from your 5 years, There's a 5 years market price. It shows that at the 2010 to 2011 is going
Back to your share price tadi.
that 5 year first.
That one.
2011, 2010 is going up.
Yeah.
Tapi then it went down again.
It went down after that.
So basically, what happened in 2012 is the 2011, but this is between 2010 and 2011 though.
Yes,
So just take that one. Yeah, that one. Actually, it went up. Went up. Even though the earning per share came down by 18%,
8%, yeah.
Maknanya berapa persen tu? How many percent? That's 18 over 20.
Yes.
That's 80%.
Yes.
By over 80%, but the price still goes up. So at that time, the market sentiment was very bullish towards Asia. And then in 2012, it also goes up. 2012, we do not know what is the performance. Yeah, but and then now it is dropping. So basically, right now it looks like the market also is giving up on Asia.
Yeah, some says it's because contributed because of the leadership. It's not more there because it's all revolved around Fernandez. So
No, I mean that.
No, Paul.
they just came on board.
Yeah, we just
And coming down, going bankrupt.
no, you can't need to turn around.
After 1 plus.
Is it possible that the movement of shares
Okay.
is influenced by the so-called collaboration between Asia and MAS?
Ya, kalau kita tengok bila dia split tu,
2012,
Yeah, this split.
in what month?
around that lah, sir.
Where on the ground?
I think yeah.
Yeah. So there is inilah, of course. Actually, when the collaboration happened, Fernandez took control of Malaysia Airlines,
Correct.
and then when it now split, so it's basically
Gone case.
gone case lah.
So it was worse for Myanmar. Okay, now. Oh, DuPont
Okay.
lost Asia.
So ROE, return on equity, net income divided by total equity. Okay, you can see that there's a decrease.
Decreased by a lot,
Yeah.
from 29% to 11%.
Yeah. That's about
Wow.
17.
2.5 times. Oh.
Their equity, their income decreased. That's because their income decreased.
Share. See the
Net
share
income.
Share equity is also.
Yeah, the net income decreased by a lot, right?
Yeah, half. Nearly half.
That's right. So on the leverage effect, okay, so there's a financial structure, total asset divided by total liability. On 2010 and 11, there's a significant increase. In the cost, there's a decrease because the profit before tax divided by profit before interest and tax. So leverage effect is you must times financial structure and cost. In 2011 you got 1.28, whereas in 2010 it's 2.02. That's a decrease.
Your financial cost effect was 1.4. What does that mean?
Which one, sir?
2010.
Okay. That's profit before tax divided profit before interest and tax.
So So that means your finance cost was negative lah.
Negative.
1.28 minus 3.0.
Profit before tax.
What was the finance cost to 2010?
2010.
Finance cost.
Finance cost, it's 384. Finance cost is that?
Yeah, 2010.
384 million.
Go to your income statement then.
Okay. Zoom.
Okay. Doesn't make sense. Your finance cost was very substantial. How can your profit before tax divided by profit before interest and tax be possible?
I think we did mistakes because I took this.
Okay. So yeah, you need to adjust that. Actually,
Yeah, we took that. Yeah,
Profit before tax plus the finance cost.
right.
we took
Yeah.
that and divided with the.
Mine
Before.
same mistake as me.
We took this and divided with this.
Yeah, you should plus that finance cost first.
Yeah.
And then you got
Just take profit before tax, add back finance cost.
yes.
Okay. That means this. Add this.
No. Tax. Profit before tax.
This.
Before taxation, add finance cost.
Add with finance cost. Okay. And then divide with.
Profit before interest and your profit before tax, yani, divide by profit before tax plus finance cost.
Okay. Sorry, sir. Thank you, Okay, then we'll change later. So activity reflect as revenue divided by total asset. Compared to 2 years, it's a slight increase on revenue for total asset. Okay. And then profitability effect is a gross profit divided by revenue. There's a slight decrease. And tax effect, profit after tax divided by profit before tax. There's a slight decrease too. Because of the tax they deduct just now.
So how do you explain now the drop by 2.5 times the return on equity was because of?
Because of the tax effect.
Yes, one of it, tax effect is significant, from 3% to 30% or 29%. What else? Profitability, from 27% to 25%, 2% drop.
And then
Activity has increased actually, so that should in a way
profitability.
should basically what else?
Financial costs.
Financial cost you need to calculate. I think that financial costs
There should be a lot of difference because we took a bigger amount, right?
actually financial cost maybe is not important, but the two important things that contributed to the decline in return on equity is the profitability and the tax.
Okay, now we're going to see Z-score.
Okay.
So first, you must see what's the working capital. Working capital divided by total asset. So how you get working capital is current asset minus current liability. So you can see that 2011 we have more working capital. Okay, and then divided by total asset, it's about 0.1151 compared to 0.0778. There's an increase. Okay, and then next. Okay, X2. X2 is retained earning divided by total asset. So retained earning you can get from the finance. Okay. So that's 0.1856 compared to 0.1588. And then X3 is profit before interest and tax divided by total asset. That's more, that is 0.0612 compared to 0.0566. Okay, X4. X4 is share price times number of share. That is 277,808,7,000 times by 10 cent. Then the share is 10 cent. And then you get for 2011 is 0.0281 compared to...
You divide by what is that?
Divide with...
Share price only 10 cent. Asia.
Yeah, it is 10 cent.
10 cent.
Pa. 10 cent pa.
Oh.
What is it?
Right.
What is
X4.
272 808 700? What is that?
Is that? The apa sir?
Yeah.
That's the share price.
Share price?
Share price.
That's the number of shares, right?
Share price. Number of shares.
Number of shares.
Yeah, but what is the share price?
10 cent, no?
10
No.
cent.
No, the share price is the share price. That's the par value.
That's why I asked just now. Why is it 10 cent only? Share price.
The share price for 2011.
Share price right now is that one. Is the current price.
Our price is 2.8.
Mm.
What's your 2.8?
Oh.
Closing
Duit
share price.
80% lah. So it's 2,800.
So that means we know it to time with 10 cent.
Right, 10 cent is the par value.
Oh.
The 2011 closing share price.
So you have
But 27782, where do you get that from?
Number of shares.
number of shares.
Where do you get the number of shares from?
The consolidated statement of...
Not to the accounts,
Yeah.
Not from the balance sheet, can?
Not from balance sheet. From the consolidated statement of changes in equity.
Huh? Okay, alright. Okay.
Sorry, there's a mistake there too. So we need to times with the $2.80.
Divide by?
Or do you divide X4 share price times number of shares?
Divide by... Divide by total liabilities.
Okay.
Sorry, I didn't write there. Sorry.
The tier is
Okay.
always divided by the tier.
Okay, divide by total liability. So that amount is wrong. Sorry, I will change back. So finally, X5 is revenue divided by total asset. So revenue divided by that, you can see that 2011 you got more than 2010.
This is asset turnover.
Yeah.
Asset turnover.
So the final formula is
Next.
Z equals to 1.2 x1 plus 1.4 x2 plus 3.3 x3 plus 0.6 x4 plus 0.99 x5.
Very high probability of insolvency.
So the figure might not be right because there's a mistake on the export.
Export just now.
So this one also I doubt is right or not.
Yeah.
But below 1.8, it indicate very high probability of insolvency.
That's why you should be.
That's why we need to be alert. Anytime kena bungkus.
Asyik. Director dah cakap macam tu.
Oh no, start selling.
Oh,
Start selling our share.
Director cakap macam tu.
But no one having preferred share here, right? You have to follow lah. So thank you very much. Any questions?
Okay, question.
Question?
Yeah, question yes.
I'm concerned about my share. Okay, I'm looking at the increasing trend of fuel price now. As you mentioned there also the fuel price increase. So can you give us assurance that despite of the fuel price increase that it will not affect our share?
It will not affect because we have increased our fleet. Okay, a bit of fleet. Which one? Yeah. That's from 54 to 57, right?
Actually,
You increase your fleet, mean you will increase your fuel cost.
Increase your surcharge. I mean, fuel.
Not that.
one thing, it's not solely depend on the fuel as well. We should look at the market sentiments, as we have a very high confidence on our brand as well. So if you believe in Coke, you should believe in us. I'm not surprised if he asked the question because you haven't gone through the brand management.
Like what you said earlier about the taxation issue, a sudden increase and it impact the revenue and everything. And then you will say that it was not Airasia fault because of the tax. But from our shareholder point of view, it doesn't concern to us because at the end of the day, we wanted to know whether our share will be affected or not. And what you can do to
Actually, the tax reduction was so much because of the 2010 amount brought forward.
Okay, so after this,
After this, it won't. Do not worry.
We will do the break-even point and we take that. We only break-even.
Sorry to tell me we learn. Anything else?
Next question.
okay.
Dah puas ke?
I'm not touching on the financial highlight whatsoever
Okay.
because you are so
Confident.
so eager to expose your revenue, but I'm concerned about your corporate social responsibility. What is Airasia contribution?
First of all, yeah, for the CSR, and it's always start from the house. So one thing Airasia is famous for compared to mass airlines is because we take care of our employees first. And apart from this, when we take care of our employees, and if you know that we haven't done much to the CSR, but we really take care of our employees. So giving you a cheap price to fly itself is a big CSR for us.
If you will take care of our employees, they will take care of the customers.
But is the salaries scheme better than mass?
But salary is not the only thing that Airasia is looking at. Seriously, if you
Values.
it's the working atmosphere and the working life itself. So they are working as based on a very big family. And if you look at Airasia, each and every one of them is their true brand advocates. And if you have note at the survey, the employee survey, they have a very good ranking for the working atmosphere as well. Yeah. So it was part of the brand survey actually. They've been done every year. And the climate survey they call it, inside climate. So the confidence, even this when they are going through a tough time, yet the employee giving a high rank to the leadership. They invest a lot in their leadership, so they have high trust in the leadership, board of leadership.
Next question.
One more question.
Yes, yes.
We have seen revenue, and also the cost, and also the tax. Is this the cause why now Asia is looking in investing on or in diversifying its business now towards university or bringing up UK universities over here in Malaysia? Are they seeing the trend that they cannot fully depend on just the low cost carrier business?
But if you look at the market trend, LCCP2, there means that LCCP2, there will be 10 airlines will operate from LCCP2. So the market all of cost. The market will be, I'm not sure how true is the story, but based on the class and all that studies. So the market, it's not to say we are not competitive, or won't be competitive enough, but the market is saturated with LCCP. So you have to tap into the market. Of course you have to diversify. That's why Tune Hotel comes in. Tune Insurance comes in. And last but not least, of all you know now, you have a Tune Tour. Tune Talk, Tune Tour. All these will be tied into their business. So next when you fly, you have a hotel with you, you have the insurance covered, and there will be tour. They will take care of you. If you want to then destination tour, everything will be taken care of. So they are diversifying.
Now Tune University, you get it?
They are bringing in university.
Because Tony's long-term dream is two things. It's not only the low-cost airlines. One is the Tune University. He believes in low-cost education. Everyone must have a chance to study. Last but not least is he will tap into the healthcare system.
Maybe in-flight lecture lah.
His wish is everybody in Malaysia should be given a chance for a higher level of education. And last but not least, the healthcare. So these two things is actually making money for Malaysia. So not easy for you to go in now. That's what he said during the interview.
Okay, last question.
I have a question about the operation cost, in particular about the fuel cost. Earlier you showed us that the fuel cost is gone up. The fuel cost. As far as I know, Airasia is popular because they normally hedge their fuel. So I mean, knowing that they normally hedge the fuel cost.
Sorry, I don't get it. What is that?
Hedging.
Okay, they are normally they will hedge the fuel cost. Even with the hedging, how can the fuel cost gone up?
Actually, that to the fuel part. Because well, we have no idea on that because we took it from the income statement.
First of concern is not really still have to spend on the fuel. Not much choice.
Yeah, actually all airlines are affected. Maybe they have hedged, but they have not hedged long enough. Or maybe because along the way we noticed that the oil price actually dropped, then it went up back. So when they hedge, if they hedge at a price and the price drop, they lose money. So then now the price has gone up again. So they actually the hedging failed in that respect. The hedging failed.
Who gives the facts on the hedging? At what price? Their strategies, is it?
The process of hedging is basically we project the share price of the oil price is going up, so we lock the price at today's market. So that's hedging basically kan. But then if the price subsequently went down, then your hedging price is higher than the real market price, so you lose money.
So meaning we still have to continue paying at the higher price. when in fact the fuel price gone up.
But also, what is the longest period that people can do in terms of hedging it?
You can hedge up to 3-4 years.
That's maximum.
Yeah.
Any other?
Thank you.
Okay, bye bye.
Yeah, right. Well done.